The current live trading session for Plug Power under the ticker PLUG is showing the stock at $2.74, marking a solid intraday increase of 3.40% as of this moment on April 10, 2026. This movement comes after a period of intense volatility, where the stock has battled to stay above the $2.50 support level. While the general market expectation for Plug Power has long been one of skepticism due to its historical cash burn and the capital-intensive nature of building a green hydrogen network, the reality we are seeing on the tape today suggests a shift in institutional sentiment. Many retail investors using platforms like the Robinhood app or SoFi Invest have watched this stock lose significant value over the last couple of years, but the current volume profile indicates that the smart money might be looking at the recent $275 million asset monetization as a sign that the company is finally finding its footing in terms of liquidity. Most people looking at Plug Power stock right now see a company that has struggled to turn a profit despite decades of operation. That is the common narrative. However, the reality hidden in the recent filings and the transition to new leadership under Jose Luis Crespo is that the company is aggressively pivoting away from being a pure-play technology developer toward becoming a vertically integrated energy producer. While the average user on investing sites might still be focused on the legal challenges and class action reminders from early 2026, the real story is the achievement of positive gross margins in the final quarter of 2025. This was the first time the company proved it could actually make more on its products than it costs to produce them, a milestone that completely changes the risk profile for those engaged in online investing. If you look at the recent daily swings, we are seeing a massive tug-of-war between short sellers and those looking for a long-term recovery. For someone managing an individual brokerage account or using the Fidelity trading platform, the technical setup here is becoming impossible to ignore. The stock has successfully moved above its 15-day moving average and is testing upper resistance levels that haven't been touched since late last year. This isn't just a random spike, it is backed by a 15% increase in trading volume compared to its daily average. When you see volume like this on a green day, it often points to institutional re-entry. Large players using Interactive Brokers Trading or Fidelity Wealth Management Services are likely looking at the global sales funnel, which now sits at over $8 billion, and realizing that if the company hits its target of positive EBITDAs by the fourth quarter of 2026, the current valuation will look incredibly cheap in retrospect. The sector momentum for hydrogen has been under immense pressure, especially with the changes to tax credits and the legislative environment in the United States. Many investors in Nvidia stock or Apple stock have enjoyed the tech-driven bull run, but those looking for diversification in green energy have had a rougher ride. For instance, the transition of 45V production tax credits has created a lot of noise, but Plug Power has managed to insulate itself by securing supply contracts with NASA and expanding its presence in the aerospace sector. This diversify or die strategy is the reality that is beginning to exceed the low expectations set by the market. When you check your portfolio on the Fidelity mobile app or through your SoFi active investing account, the question isn't whether the company is losing cash, but whether that cash burn is slowing down fast enough to reach the 2028 profitability goal. Let's talk about the business model for a second, because that's where the expectation versus reality gap is widest. People think of Plug Power as just a fuel cell company for forklifts. That was true 5 years ago. Reality check? They are now operating a massive liquid hydrogen plant network capable of producing 40 tons per day. They are providing Gen Eco electrolyzers to projects in the United Kingdom and Portugal, and they are moving into the data center power market, a sector that is currently starving for energy due to the AI boom. If you're involved in online investment through a Schwab Intelligent Portfolio or a SoFi Robo-Advisor, you're likely seeing more exposure to these niche energy providers because big tech is desperate for carbon-free baseload power. Institutional activity has been a mixed bag, which adds to the tension. While some funds have been trimming positions, others, like Two Sigma and Invesco, have made massive additions to their holdings in the last few months. This shows a deep divide in how the professionals view the hydrogen economy. On one side, you have the bears, who look at the $535 million in operating cash used in 2025 and see a sinking ship. On the other hand, the bulls look at the 26.5% reduction in that cash burn and the $368 million in cash on hand as a bridge to 2027. It is a high-stakes game of chicken. If the company closes its remaining asset monetization deals in the first half of 2026 as planned, the liquidity concerns that have haunted the stock will largely vanish. Comment below how many shares of Plug Power you currently hold, or if you're waiting for it to break above $3 before you jump back in. This kind of engagement is what defines the sentiment for a stock like this. Are you someone who uses the Robinhood crypto features and sees hydrogen as the next speculative frontier? Or are you a conservative investor holding Fidelity ETFs who sees this as too risky for a core position? The debate is real, and the comment section is usually where you see the first signs of a shift in the retail narrative. When we look at the macroeconomic pressures, the interest rate environment remains the biggest hurdle for capital-heavy businesses. Every time the Fed speaks, stocks like Tesla stock and PLUG react violently because their future earnings are discounted more heavily. However, the internal restructuring of debt that Plug Power completed at the end of 2025 has given them a bit of a shield. By extending maturities and lowering interest expenses, they've bought themselves the most precious commodity in the markets, time. This is something that isn't always reflected in a quick glance at the stock price on an Interactive Brokers account, but it's vital for the long-term outlook. The future outlook for Plug Power hinges on its ability to execute its 2026 strategy. The reality is that the hydrogen market is expected to grow to over $226 billion this year alone. If Plug Power can capture even a small sliver of that while maintaining its new disciplined cost structure, the narrative will shift from "will they survive" to "how much can they earn?" The catalysts to watch are the commissioning of the Galp refinery electrolyzers and any further updates on the U.S. data center partnerships. These aren't just press release fluff, they are concrete revenue drivers that will show up in the earnings reports toward the end of the year. As we look at the broader picture, the contrast between the expectation of a slow decline and the reality of an operational turnaround is becoming stark. The company has moved from a period of growth at all costs to a period of profitable growth with discipline. This is a difficult transition for any company, let alone one in a nascent industry like green hydrogen. But for those who are watching the tape, the intraday strength we are seeing today at $2.74 is a small but significant signal that the market is starting to price in the possibility of success. Whether you are using Robinhood investments for a quick trade or managing a complex portfolio on the Interactive Brokers platform, the volatility in Plug offers both a warning and an opportunity. To summarize the central insights we've covered today, the expectation was that Plug Power would continue its downward spiral as it ran out of cash and regulatory support. The reality is that the company has secured new liquidity through asset sales, achieved its first positive gross margins, and is seeing a significant uptick in institutional buying volume. We've seen the stock price move up over 3% today, breaking through key short-term resistance. We've looked at the leadership change as a pivot toward commercial discipline and analyzed how the AI-driven data center demand is creating a new, unforeseen market for hydrogen fuel cells. The tension between the market's lingering doubt and the company's operational progress is what will drive the stock for the remainder of 2026. If the EBITDA's goals for Q4 are met, the reality will have officially conquered the negative expectations. Until then, investors should remain focused on the volume and the cash burn rates reported in upcoming sessions. This is a story of a company fighting for its place in a new energy landscape, and as of this afternoon, the tape is telling us that the fight is far from over. Maintain your edge by keeping a close eye on the institutional flow and the legislative updates regarding the 45V credits, as these will be the ultimate arbiters of Plug Power's valuation in the coming months.